Hi, thanks for joining me in my market report. My name is Mike, and my market report is on mortgage rates. We kind of go into what's impacting mortgage rates on a daily basis, whether it's uh, economic data, whether it's headline news or geopolitical or just different sentiment that's going on out there with investors that may make mortgage rates go up or down. If you're not aware, mortgage rates are dictated by mortgage-backed securities, which are bonds that are traded on Wall Street. They bundle them up and sell on Wall Street, and this is why we can have some volatility, but not like stocks where it's a little more slow moving than stocks, but we do get some volatility where we can have reprices, maybe even on a volatile day. We've had them several times in one single day. Uh, so a little bit about myself is I am a loan officer. I do work with the national lender. We are here to help in any capacity, whether if you're looking for questions on mortgage rates or if you're looking for questions on uh, programs that are available out there for you, or whether if you're looking just got some general questions. We're here to help. We love to earn your business. If you're looking to refinance or purchase, please reach out. We'd love to be able to talk to you. We do got a wide variety of loan programs that could match many different needs, as well as we got some great rates and service here. So we'd love to be able to talk to you about how we can serve you. We do loans in all 50 states, so we are available. So without further ado, we'll jump right into this. We'll start off with the economic calendar. Today we just got one item here, and that is the new home sales for the month of August. So in July, uh, this was revised from 1% down up to going up 6.5 or 6.4%, and it came in at 1.5% increase. So what that means is that we had 708,000 annualized units for the month of August, the initial one, but it was raised to 729,000. Forecasters count for 714,000, and it jumped up to 740,000. So this is obviously good news that we're getting some more properties out there in the market, which is why we saw some higher sales for the new home sales. And then we're also starting to see a little bit more confidence coming up for home builders as inventory's been shrinking and helping out new home or helping out buyers out there. So a lot of people are going from regular homes to new homes as the inventory's been so competitive out there for them. Uh, Headline news: basically, stocks are down so far today. They are still kind of watching. Investors are still kind of watching the Evergrande. They did say that they're going to make the payment, but they do get a 30-day grace period. So and the creditors have yet to receive payments. It's like $83.5 million for interest payments. So they have yet to see it. So again, stay tuned. That could be a big debacle if it gets down to the wire. The investors get a little nervous and may kind of see, but they're also trying to calm the waters by stating that it's not going to be a layman situation where it's pretty much more in-house, so to speak, in China. It's more Chinese banks than a global situation here. Um, so that would be so they're trying to calm in that regards. Now, also we do got the momentum. Yesterday we had a lot of the talk from the FOMC on Wednesday, and that kind of carried over today, or carried over yesterday, and got the momentum going. Stocks started taking off, figuring that they would go ahead and probably even start tapering this year, maybe even as soon as November. And then they had mentioned that rate hike could even begin as soon as next year as well. So that means the Fed's gonna, or the investors are gonna think that the economy's gonna be going good, and might as well get moving. So unfortunately, that hurt mortgage rates yesterday. We dropped about 53 basis points, which translate when I talk about these basis points, every 10 is about 1/10 of a point. So in this situation, that 53 basis points is approximately about a half a point cost. So that no point loan yesterday now would have cost you a half a point to get that same rate. So that's what that means. Now this morning, that momentum started carrying through. We were way down about 17 basis points. So we were down starting off this morning about 17 basis points. And now we've made a huge change, and we're up about 6 basis points. Same thing here on the treasuries. The treasuries were way up to touching at 1.46 range, and we're just under 1.45 now. And as you saw here, we had a huge jump way up in this range here, breaking above several levels here, and that's adding more pressure. Now, this is taking into what's going on here is you got investors coming in and buying in the dip, so to speak. So after that big sell-off, Now you got investors coming in and buying where they're at right now, and with the higher yields and the higher rates here. So what does that mean? Well, yesterday we did have a price for the worst. We had a couple of price changes yesterday. Right now, those who priced early on and had this negative here, they may be coming in and pricing, getting repriced for better. If they're coming in late, like around now, late around 9 o'clock Pacific Standard Time, they're going to probably come in about unchanged levels right now. So they'll probably be unchanged from yesterday's close. Unless they didn't do a reprice, then they'll come in a little worse. So as you can see here, we dropped quite a bit. When we did our report, we were down about 30 basis points. That's another 20 basis points that we added onto it. That, again, accumulated more change. And it's usually about 12 basis points that could affect you in terms of any rate changes, which means it could be about 1/8 of a point, 1/8 in the rate cost for you. All right, so I hope that makes sense, folks. If you guys again got questions or have anything we can help you out with, we're here to help. Please reach out. We're here, and we love again help you with your refinance or purchase needs. So please talk to us. If you guys like these videos, please reach out and smash that like button. We greatly appreciate any assistance you can help. You guys have a great rest of your day. Enjoy your weekend. We'll look forward to see you on Monday. Oh, and meanwhile, I almost forgot. You can see here these national rates here, how much they jump. If you watch from yesterday to today, you saw 15-year jump from to 2.53, and then 30-year jump up to 3.1. These are kind of national average. There are points that usually go into those, but these are what much of a jump. If you've been following videos, you'll see how much of a jump that was. All right, folks, have a great rest of your day. And again, thanks again. We'll see you in tomorrow's video, or see you on Monday's video. Bye-bye.